The S&P 500 or SPY is one of the most actively traded options products on the planet, and for good reason. In this video, we will be delving into trading SPY options and why you may want to consider trading SPY options as part of a well-rounded strategy. We will get started with the valuable investing content right away, but first, we wanted to provide you with a free gift. Here at Finance Fitness, we are committed to helping you build wealth and financial freedom. In order to fast-track your wealth-building mindset, be sure to check the link in the description below for your free copy of the Wealthy Mindset book. The S&P 500 ETF Trust, commonly referred to as the SPY, is one of the most widely traded exchange-traded funds in the world. Designed to track the performance of the S&P 500 index, SPY provides investors with exposure to a diversified portfolio of large-cap U.S. stocks across various sectors. With its inception dating back to 1993, the SPY has become synonymous with the broader market and is often used by traders and investors alike as a benchmark for gauging market sentiment and direction. You may be asking yourself, why should I care about SPY options trading? Trading options on the SPY offers market participants a myriad of benefits and opportunities. As the most actively traded ETF in the world, SPY options provide unparalleled liquidity and depth, allowing traders to execute their strategies with ease and efficiency. Furthermore, SPY options enable investors to gain exposure to the broader market while mitigating the risks associated with individual stock selection. The primary objective of this video is to provide a comprehensive guide to trading SPY options. Through a detailed exploration of contract specifications, trading strategies, risk management techniques, and practical insights, you will gain a deeper understanding of how to effectively incorporate SPY options into your investment arsenal. The content provided in this video is for informational and entertainment purposes only and should not be considered as trading or investment advice. Please review the full disclaimer in the description section below this video. Options are derivative financial instruments that grant the holder the right, but not the obligation to buy or sell an underlying asset at a predetermined price, known as the strike price, within a specified period, until the expiration date. There are two primary types of options, calls and puts. A call option gives the holder the right to buy the underlying asset, while a put option grants the holder the right to sell the underlying asset. SPY options have specific contract specifications that traders need to understand before trading. These specifications include the following. Expiration dates. SPY options have expiration dates that determine the duration of the option contract. They typically expire on the third Friday of the expiration month. Strike prices. Strike prices are predetermined prices at which the underlying asset can be bought or sold. SPY options offer a range of strike prices to choose from. Option styles. SPY options are typically American-style options, meaning they can be exercised at any time before the expiration date. The key characteristic of European-style options is that they can only be exercised at expiration, not before. This means that the holder cannot exercise the option before the expiration date. Contract size. Each SPY options contract represents 100 shares of the underlying SPY ETF. To effectively trade SPY options, it's essential to understand key terminology associated with options trading. Some important terms include the following. Call options give the holder the right to buy the underlying asset at the strike price, whereas put options give the holder the right to sell the underlying asset at the strike price. These definitions apply to purchasers of the options contract, whether it be the purchase of a call option or the purchaser of a put option. It is also possible to sell an options contract, where the seller receives a premium or money paid up front. In the case of selling an options contract, the seller of a call option has an obligation to buy the underlying asset at the strike price, whereas the seller of a put option has an obligation to sell the underlying asset at the strike price. In summary, options buyers have rights and options sellers have obligations. In the money, ITM, at the money, ATM, and out of the money, OTM. These terms describe the relationship between the option's strike price and the current price of the underlying asset. Where the price of the underlying asset is above the call strike price or below the put strike price, it is said to be in the money. Where the price of the underlying asset is below the call strike price or above the put strike price, it is said to be out of the money. Where the price is sitting directly on the strike price, it is said to be at the money. Feel free to replay this section of this video if necessary to grasp these concepts. Next, we will discuss the many advantages of trading SPY options. You will not want to miss this next segment. One of the primary advantages of trading SPY options is the exceptional liquidity and volume they offer. As the most actively traded ETF in the world, SPY options attract a vast number of market participants, including institutional investors, hedge funds, and retail traders. This high level of liquidity ensures tight bid-ask spreads, minimal price slippage, and efficient order execution, allowing traders to enter and exit positions with ease and at competitive prices. SPY options provide traders with a wide range of trading strategies to choose from, catering to various market outlooks and risk preferences. Whether you're bullish, bearish, or neutral on the market, SPY options offer the flexibility to implement strategies such as buying calls or puts, selling covered calls or cash-secured puts, or constructing sophisticated option spreads like vertical spreads, iron condors, or butterflies. Trading SPY options can be more cost-effective than trading individual stocks, especially for investors seeking exposure to the broader market. Unlike purchasing shares of multiple individual stocks to achieve diversification, trading SPY options allows investors to gain exposure to a diversified portfolio of large-cap U.S. stocks, represented by the S&P 500 index through a single ETF. This approach not only reduces transaction costs and commissions, but also minimizes the impact of company-specific risks, enhancing the efficiency of capital deployment. Another significant advantage of trading SPY options is the inherent diversification benefits they offer. By tracking the performance of the S&P 500 index, SPY provides investors with exposure to a broad spectrum of sectors and industries within the U.S. equity market. This diversified exposure helps mitigate single stock risk that may affect individual companies, thereby enhancing portfolio resilience and reducing overall volatility. Trading SPY options offers a wide array of strategies to capitalize on various market conditions and achieve specific trading objectives. In this segment, we will discuss some of the most popular options trading strategies. Buying call options. Buying call options is a bullish strategy that allows traders to profit from upward price movements in the underlying SPY ETF. By purchasing call options, traders gain the right to buy SPY shares at a predetermined price, i.e., the strike price, within a specified time frame until expiration. If the price of SPY rises above the strike price before expiration, the call options become profitable, enabling traders to capture the price appreciation of the underlying asset. The risk associated with buying call options is limited to the premium paid for the options contract. However, the potential reward is theoretically unlimited, as the price of the underlying asset can continue to rise indefinitely. Buying put options. Buying put options is a bearish strategy that allows traders to profit from downward price movements in the underlying SPY ETF. By purchasing put options, traders gain the right to sell SPY shares at a predetermined price, i.e. the strike price, within a specified time frame until expiration. If the price of SPY declines below the strike price before expiration, the put options become profitable, enabling traders to profit from the decline in the underlying asset's price. Similar to buying call options, the risk associated with buying put options is limited to the premium paid for the options contract. Conversely, the potential reward is theoretically unlimited, as the price of the underlying asset can continue to decline indefinitely. Selling covered calls is a neutral to bullish strategy that involves selling call options on SPY shares that the trader already owns. By selling covered calls, traders collect option premiums, generating income from the options market. If the price of SPY remains below the strike price of the call options until expiration, the options expire worthless, and the trader keeps the premium collected as profit. The risk associated with selling covered calls is limited to the potential opportunity cost of foregoing future gains if the price of SPY rises above the strike price of the call options. Selling a cash-secured put is a neutral to bullish strategy that involves selling put options on SPY shares that the trader is willing to purchase if assigned. By selling a cash-secured put, traders collect option premiums, generating income from the options market. If the price of SPY remains above the strike price of the put options until expiration, the options expire worthless, and the trader keeps the premium collected as profit. The risk associated with selling a cash-secured put is limited to the obligation to purchase SPY shares at the strike price if assigned. To manage this risk, traders should be comfortable owning SPY shares at the strike price and maintain sufficient cash reserves to cover the purchase if necessary. Spreads and combinations. Vertical spreads involve simultaneously buying and selling options of the same type, either calls or puts, but with different strike prices and/or expiration dates. Vertical spreads allow traders to limit their risk and potential reward by defining a range within which they expect the price of SPY to move. Iron condors are advanced option strategies that involve combining a bear call spread and a bull put spread. This strategy aims to profit from a range-bound market where the price of SPY is expected to remain within a specific price range until expiration. Butterfly spreads involve buying and selling options of the same type, either calls or puts, with 3 different strike prices. This strategy aims to profit from low volatility environments, where the price of SPY is expected to remain close to the middle strike price until expiration. Technical analysis is a crucial tool for traders seeking to analyze price movements and make informed decisions when trading SPY options. By studying historical price data and identifying patterns, trends, and key levels, traders can gain valuable insights into potential future price movements. Next, we will explore some key aspects of technical analysis for SPY options trading. One of the primary objectives of technical analysis is to identify trends in price movements. Trends can be categorized as upward, bullish, downward, bearish, or sideways, range-bound. Traders use various technical indicators and chart patterns to identify and confirm trends, such as moving averages, trend lines, and chart patterns like head and shoulders, triangles, and flags. Recognizing and following trends can help traders align their trading strategies with the prevailing market direction, increasing the probability of success in SPY options trading. Support and resistance levels are key areas on a price chart where buying and selling pressure converge, leading to potential reversals or continuation of price movements. Support levels represent areas where buying interest is strong enough to prevent further price declines, while resistance levels denote areas where selling pressure tends to cap upward price movements. Traders use support and resistance levels to identify potential entry and exit points for their trades, as well as to set stop-loss and take-profit levels to manage risk and maximize returns. Technical indicators are mathematical calculations based on historical price and volume data, designed to help traders analyze market trends, momentum, and volatility. We will explore some of the most popular technical indicators used in SPY options trading. The Relative Strength Index, RSI. The RSI measures the magnitude of recent price changes to determine overbought or oversold conditions. The RSI can be a useful tool in determining if a prolonged move on direction is potentially becoming exhausted and may reverse soon. Moving Average Convergence Divergence, MACD, consists of 2 lines that track the momentum of price movements, signaling potential trend reversals or continuations. Bollinger Bands. Bollinger Bands consist of a moving average line and upper and lower bands that represent standard deviations from the moving average, helping to identify volatility and potential price reversals. A contraction of the bands indicates a tight consolidation area, which can often be followed by a strong move. A widening of the bands usually indicates a volatile move. Technical analysis provides traders with valuable insights into market dynamics and helps them make informed decisions when trading SPY options. By mastering technical analysis techniques and incorporating them into their trading strategies, traders can enhance their ability to identify profitable opportunities and navigate the dynamic landscape of the financial markets effectively. Be sure to check out the link in the description below to check out the OptionsStrat Traders Toolkit. We believe the OptionsStrat software tools are currently the best tools available for those wishing to trade options. Here at Finance Fitness, we are committed to helping you achieve your financial goals by providing you with valuable finance-related content. Please be sure to like and subscribe, and we will see you on the next video.